Hey, this is Daryl Martin with ApexInvesting.com doing another version of Be the Sniper or Be the Target. It's your choice on which one you got to be. You got to make psychological choices, you got to make trading choices, and you have to make the choice to choose the right tools. There's a lot of free tools out there, and people try to obviously imitate us, but they never actually accomplish duplicating us. And that's because we put in well over a decade of experience with successful trading and a lot of traders being involved in it. So, make sure you're using the right tools and investing in yourself. So with anything we want to do right here, we want to, obviously say there's risk involved in trading, know what you do before you're doing it, etc. And what are we going to cover today? Well, let's talk about something. Do y'all think the markets are a little bit different this week than they have been in the last few weeks? Have y'all found that out? Has it made it a little harder for you to trade? A lot harder, much harder, like moving like molasses. Far less opportunities. That's so true. And can it be easy to sort of try to see something that isn't there? Have any of y'all maybe missed a trade I called because you were away and then all of a sudden you came back and you saw that you missed one and so you decided to find your own trade and it didn't work out so well? Talking to me again. That's funny. Yeah, it's very easy during this time to try to make something happen. And a few things that, I want to point out to y'all is make sure that, you are being very disciplined, being very patient, okay? This is a good thing for you to learn right now because things will speed up. And one of the things that I've said in the room repeatedly is if you will stick to the plan, if you will be patient and be disciplined now, you will build your confidence for when markets start going faster. Because when they're going faster, you don't get time to make decisions. You just have to make them, right? So it's sort of funny. I heard, 2 weeks ago, people going, man, I can't even get into trades. They're so fast. Da, 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 da. And now it's like, oh my gosh, I'm just going to get into a trade just because I'm tired of sitting here. So I want to hit a button. And then now I'm mad because Daryl called a trade and then I did a trade that wasn't called and now I'm upset. But you're not sticking to the plan. You're trying to read things. So what are we going to cover that might help you with that? We're going to talk about obstruction levels, like when not to trade. You think that might help you out? We'll go through some chart examples on that. So do you think that could really help you out when markets are slow like they are right now? Help you make better decisions? All right. We're also going to go into trading other markets. When to do it, when not to do it, how to do it. Do you think that might help if markets are moving like molasses to be able to look at a few markets? But do you want to sort of know what some of the rules might be for using those markets? Okay, so we're going to talk about that. Now, we're also going to have some Q&A time. And we're talking about making the most of the holiday. Are some of y'all going to have some free time coming up? This coming week with Christmas? So some are like, I'm going to have no time. Some are like, yes, I'm going to have time. So you want to make time. Make the most of the time that you do have. And is making the most of that time, do you think it's going to be trading when the markets are really illiquid while all the big boys are out? Or do you think maybe it could be better used doing replay and things like that? Got to clean out the barn. Tell me about it. I got a whole barn I need to clean out. Yeah, doing some replay. Have any of y'all been watching that all-in mind mastery course? That might be a good use. What about section 8, making sure you've covered all those videos, maybe covering them again? Would that be a good use of your time? So don't feel like, oh, I can't trade, so therefore I'm wasting a week. It's like, no, you actually can get better at trading, so as markets pick back up, come the middle of January, you'll be ready to go, okay? And then the most important thing, of course, is family time. So, anybody can pull a trigger. Is it pretty easy to figure out what an X box trapped order is? Do you think that's hard or easy? So most of you are saying easy, some of you are saying no. It should always be, it's easy to pull the trigger. Easy to spot. Right? I mean, everybody should be able to see it. But looking for that clear, clean shot. Right? That's the harder part. Not having those obstructions. No leaves, no branches or obstructions in your way, right? So anybody can pull the trigger, but you got to be able to pull it during a clean shot. Infantry shoots thousands of bullets to make one hit. Sniper, 1.3 to make a hit. So do you want to do the shotgun approach or have clear vision that nothing's in your way? Which one do you think you want to have? Nothing's in your way. That's right. So like I said, anybody can learn an Xbox trapped order in no time. I mean, I taught my son Xboxes in minutes, and he trades them. But do you think maybe I help him see a little clearer? So that's an edge that he has, right? So knowing when not to trade is more powerful than understanding the setup. And that's where, like, mastering setup 2, section 8, that's where that comes in, is knowing when not to trade. Okay? So anybody can teach you when to trade. The big difference is when not to trade. That is what separates the professionals from the amateurs. So I know how to drive a car, but I have to make sure I don't drive it into a concrete barrier, right? With scalping, it is really important to have no obstruction in sight within 10 ticks. Do you agree with that? Now, can there sometimes be exceptions to that rule? Possibly, but do you think you should be trying those exceptions without us telling you to do so? Like maybe I see something like today I called a trade, and I'm like, I see 250 contracts on NQ, which usually you see like 10. Like the market is going up to this level, and I threw on 10 contracts, hopped in the trade, called the trade, trade one. So it's seeing what, you may miss, okay? So here's a list of obstructions, and I'll stop after a second. Y'all can take a screenshot or whatever, or just, catch it on the recording. But settlement is an obstruction. We'll talk about what settlement is in a second. Deviation levels, okay? That is an obstruction that you don't want in your way. Ice levels, the big red, green, and blue levels. You don't want those in your way. Okay? Stacked levels. So we're going to see that you don't see as many stacks right now, but you do see them some. But stack levels you definitely don't want in your way, like especially when you start going into low areas. Stacked levels are very important. And if you watch the Mastering Setup 2 section, you'll be able to find a whole section on that. NQ walls. So right now we don't have a lot of walls at the highs, but as we go back down, and we will, then we'll have walls. And you don't want to go in those. And walls paint all the way to the right side of the chart. Gap levels. So those look like NQ walls in the sense of they draw all the way to the right side of the chart. Okay? If you're at highs of the market, that might be an area you want to avoid. 3-bar chop, meaning coil chop. Bar goes up, down, up. That's an area you want to avoid. You don't want to take trades, especially against the trend. High potential for chop when volume is less than 75%. You want to be very careful. And you'll notice that a lot after like 10:30 a.m. right now. So if you want to take a screenshot of that, you can real quick. A reminder, somebody said, where can I find the Mastering section. That is section step 8 on the sniper page. Okay. Let's see, another question. Can you explain what makes a gap level so strong? Basically, the market jumped, usually between a Friday and a Sunday. And the stocks last traded at that price and then gapped massively up. So there's a lot of unfilled orders right there, which is going to make it want to bounce. So do I consider big numbers as obstructions? If I'm looking at the DOM, I got to define what big number you're talking about. Oh, you're talking about zeros. Yes. So I wouldn't call them obstructions. I just say markets do pull to, like, 0 numbers like 8,400, 8,500, 8,600. So, all right. So everybody should have a chance to screenshot that, or you can on the replay, but let's look at some chart examples, okay? So in this one, there's a lot to look at, but the main thing I want you to see is the settlement line, okay? That is, the settlement is where the market, where everybody agreed on the price of the value of the contract at the close of the market, okay? On the previous day. And a lot of times you will see chop around that area. So you don't want to take a trade right around settlement because often it will chop. Like you got an X box right here. You even have OD divergence on it, but you got a settlement line right there. It goes up a little bit, and what does it do? It comes right back down. So you need to be really careful about trading off settlement. Unless me or Lori say something differently, you need to be really careful about touching that. Is that simple enough? Settlement, and that's one of your strongest levels that will cause chop. Everybody got it? Anybody lost? Everybody good? Okay. So, a wall. Okay, if you get a wall up here that is plotted on the chart, then you don't want to trade into a wall. Does that make sense? Like, you wouldn't want to take a buy into this. Like, let's say this triple dipper turned around, you wouldn't want to take a buy into it. And then, look at here at, the dev levels. Okay? Very dangerous, because what happens at the dev? The one dev right here, things start chopping around. And the trade may work out, but it gets really tricky at those dev levels. So see how, like, this has like an X box to go long, but look, we're right there and it chops around, and that one would have worked, but you would have sweated like crazy. And often they don't. So this one gives you a chance to go up above the dev level. But do y'all see, like, the deviation level? Okay, so when you see those deviation levels, the 0.25, the 0.5, 0.7, the 1, stuff like that, okay? That's the blue line right here. It says +1. It has a D on it right there. Right there. Everybody got it? Now, something else to watch out for is Paul lines. See these orange lines that come across the chart? Bounce off of one like this is good, but you do got to be aware on this one because you even have a Paul level right there. Now, you get like an X box off a Paul, that's fantastic. This one has plenty of room. Do you see that? Nothing in the way. X box, trapped order, magnet, coming off a Paul line, plenty of room. I don't know what Lori's comments means. Hold on. All right. All right. So, Paul really indicates that the market is ready to push off of that level. Now, right here, what do you think we have? What would you call this? Give everybody a chance. Definitely got mini magnets. We got stacks. Did you say we have chop with this, with all these mini magnets on both sides? I mean, we got pause, mini magnets, up, down, up, down. Is this an area where you should be trading at all? So should that be clear to you? Even though you see like triple dippers, you might see other setups. This is an area you'd want to avoid, right? Yeah, that's a coffee break. But I mean, this is a good section to see. Like when you see something like this, like, okay, it's walk away from that chart. Wait till it gets out of the ick. All right, right here, you got a short, but it's going into a dev level, and there's mini magnets right there. So even though that trade would have worked, would you want to take it? And if you did accidentally take it, where should your take profit be? It should be above the mini magnet. Right. So if you were to take it, that's where you'd want to take it. But ideally, don't take that. I would avoid triple dippers and chop like this because you don't have room for the triple dipper to work. Do you see that? There's no room for it to work. And if you're not having success in chop, don't trade in chop. If you don't know, don't trade that area. Okay? But y'all see like areas you don't want to go into. If you want to learn about, Joshua says, if you want to learn about chop, check out the binary mastery course. And he is right. That whole course is dedicated to learning chop and how to trade chop. Even if you're not interested in binaries, the whole course is dedicated to mastering that. Okay? And how to master the breakout of chop. The binary mastery course is actually about breakouts of chop and how to trade them. So it might be one that I'm not saying you have to do it, but if you're having a hard time with chop, like Joshua says, it changed his world. Like, it'll teach you how to embrace chop and use it. Lyle says it was an absolutely great course. I did not type that. What do you see here? We got ranging, but also, yeah, we've got levels at highs. We have an institutional block, and we have a paw. Would you want to take longs up there? There you go. Also, you see a deviation. There you go. There's a deviation right at the eye block with a paw right above it. It's just like hitting a brick wall. And notice it hits it, comes up, doesn't quite reach it, hits it again, messes around, then goes back down. So it would not be an area that you'd want to trade into. It's an obstruction. Okay? This isn't supposed to be a real complicated webinar. This is supposed to be just to hopefully open your eyes a little bit. Okay? Yeah, that institutional line is green. Yes. That is the green line. What do you see here? Yeah, I'll go back to, this area in green right here. You see this I block, this dev level, there's a paw above it. Like, don't go long there. You see chop, but how do you know there's going to be chop? How do you know it's coming before it even happens? Yeah, you got the double clusters. 2 clusters within 2 or 3 bars. And that's those little yellow things that print on there. You get 2 of those within 2 or 3 bars, chop is most likely about to follow. It laid a paw, a mini magnet, it went up, it laid a mini magnet. Now we're definitely in chop. Come down, we lay a paw, mini magnet, another paw. Right? And it's not that there can't be a good trade in here, it's just, is it worth it? Yeah. No. And just don't do it. You may see me trade inside chop sometimes, but that's because I've done it a lot longer. I can read it. I can know when it's about to break out a lot better. Just because I do it, should you do it unless you've also learned how to read it and know when it's going to break out? Should you be trading chop unless you know how to read when it's going to break out? Does it make sense that I might be a little more familiar with how to trade chop and break it out? Since I've been trading for 15 years. Right, so does it make sense that I teach you not to do it because it's difficult to learn and it takes time? It's something you have to learn to see. You have to feel the heartbeat of the market. So, because sometimes people are like, man, Daryl traded that. And like, well, Daryl sees things that you don't see. I've seen patterns. I see other things, right? But it's one of those things that you just either learn over time or you learn just to stay away from it. Okay? Does that make sense? And again, if you want to learn more about chop and breaking chop, check out the Ultimate Breakout course. I'm not even trying to sell it to you. I'm just saying if you want to learn chop, then check that course out. Okay? Because we spent a whole lot of time going into that. Over here, what do you see? Coil chop. There you go, Stephanie. Yeah. So up, down, up, down. Would that be an area if you had a trade you'd want to take it? No. When you see coil chop, stay out of the way. Yes, eventually it will take out and it'll run. Just wait for lower hanging fruit. All right? Your goal is low hanging fruit. Yeah, and it's chopped right on top of settlement. Exactly, Breck. You got the triple dipper going right into a paw. Yep. And settlement right there where you expect chop to be taking place. All right, so are y'all starting to see some of this? Is this coming together for you? Like, it's so easy to make this hard. Would y'all agree? It can be really easy to make this difficult. But just going over those charts, which weren't really clean charts. I mean, did we pick like perfect little pretty charts for you? Or did we just pick normal charts where things happen? No offense. Like, do you think these were perfect charts, or do you think these were charts full of all sorts of stuff? Okay, so are these things that you think you can actually start to see? So Stephanie brings up, sometimes the hard part is trying to see the obstruction before the trade happens. I would agree. Go back to your 7 steps, right? Identify the target, like an X box, trapped order. Identify the pattern or reversal bar. Step 3 is actually identify the obstruction. Step 4 is identify the entry. Eric's like, now it looks harder. Well, I wanted to show you some hard charts, some complicated stuff. I didn't want to get cherry-picked stuff. I just wanted examples. So it's just, when you see us, and all these don't even have setups on them. Okay, some have setups that work, some of them don't even have a setup. Yeah, here's an Xbox trapped. Yeah, there you go. Look at this. Do y'all see this chop right here? Do you think that's a trade you should take? Why shouldn't you take it? Is a mini magnet above it, below it? Is there a mini magnet obstructing your way? Yeah. So what about on this one? What do you see? Some big green arrows pointing to something for you. What can you see on here? Drops it. Low volume. Exactly. So letting y'all have a chance to look at it. So y'all see the low volume. Do you think it's harder to trade when there's low volume? When it's below 50%? Yeah. Low volume equals nothing to move the market. So be very careful on looking at setups when your volume drops below 50%. Okay? What about here? What do you see? Star ZOI crash? Yeah, should you ever take it? Do you think maybe a ZOI crash might be something you want to avoid trading into? Like if you had a short right here, is that the best I mean, you didn't have a ZOI crash. Yeah, but let's say a ZOI crash already existed and you had a short here. Would you want to trade into it? It's a great reversal trade. Trade with it? Yes. Trade into it? No. Exactly. So let's go through those again, okay? Does that sound good? So we got like stack levels, ice levels, deviation levels, settlement, walls, gaps. I mean, levels, okay? Yeah, I am defining low volume as 50%. Yeah, all-time highs. So if you look at all-time highs, like very dangerous to trade into. The And it's very difficult to trade. Have y'all, I mean, we're at all-time highs. Has it been difficult to trade at all-time highs? Yeah. Okay, so be careful trying to trade at those all-time highs. Trying to find a chart for y'all. Somebody asked for something. So this red level right here, there's going to be a red level, a blue level, and a green level. That is ice. So on this one, you can see the red level, and you can see the blue level right there. This blue level. All right, looking at this, at the high, and this is just chart review time. So here's another one that John just sent me. Hold on a second. On this one, you got DR divergence. You take the short, but you're going to a wall, and it falls and fells. Let's see here. So over here, you got a short right at the wall, even though you have DR divergence, but it's right at this wall. See these walls right here? They go all the way to the right side of the chart. These dashed lines. So it goes right into that wall and then fells. ICE is where most of the volume happened the previous day. We calculate it a little bit different. It's called volume profile, but we calculate it differently than most people do. We also calculate it on FX with futures volume, which nobody does. But, so you see that right there, and it's going right into that wall. All right, see this level right here? What is this level? Like a wall level right there. An all-time high, at least at this point, right? So you also got pause right there. So I'm just trying to get y'all to look at some of this stuff. You see like it goes up, makes this paw, comes down. Look how it goes down right to that paw, just breaks it by a little bit, comes back up, bounces off of this one, makes it up, comes down, bounces right off of it, stops here, clusters, makes another one. This ball happens to go short. You're actually up at highs on this, about above the deviation. And it breaks up. Yeah, some of y'all are way too zoomed in. What I'll do is if I think there's a setup 2, I'll zoom in to see the setup 2 and confirm that the trapped order's there, and then I'll zoom back out. So again, what do we got here? We got chop, right? We got all these mini magnets printing everywhere. Yeah, one person, Stephanie says she has a zoomed out chart and a zoomed in chart. Now, an area where you might see me trade is like I'll see like an Xbox short off of this magnet at this high. And then I see, hey, I have room down to the obstruction. Do you see that? So even though we're in like a range zone, we have a lot of room. Not like just enough, but as Lori put it very well today in the room, She's like, you need to be able to take your profit like halfway through that chop range, not like just top to bottom. So this one had some room. This one did not have room. Also wasn't at the top of it. It was in the middle of this choppy range. All right. So again, these trades can work sometimes, so they can bite you. If you get in and maybe you didn't see the obstruction like Stephanie said, and then all of a sudden you notice it, you better tighten up your take profit. So one of Lori's comments is a sniper not only needs a clear path to take the shot, but it needs plenty of easy getaway as well. So over here you got a triple dipper, but your entry is above the ice zone and you have room, right? So take the low-hanging fruit. This one right here, you got a short going into a wall, right? Be a bad idea. So over here we got deviation levels. We got institutional block, the green line. We have a Paul level right there. We have another Paul level above it. You got a stack. You got three things. And the orange line, where is an orange line? I'm not sure where the orange line is. Go back. Okay. Saying right here. This line, oh, there's an orange, it's like right, it like blends in, but there's an orange line right there. That's actually a dynamic magnet. I'm going to be teaching dynamic magnets on December 30th. Yeah, right above it, there's an orange line, there's an orange line. Yeah, these orange lines are actually dynamic magnets. I'll be teaching you all about those on the 30th. See, y'all starting to see some of the stuff that gets in the way? You see how it's easy just to get so caught up in the Xbox that you just take it because you're so caught up in trend or DR that you're not looking at obstructions? Has anybody been guilty of that? You're like, Xbox, is it a trend? Is there DR? You don't even look to see if there's something in your way. You don't even look to see, are you in chop? So start to define that stuff before you even find the setup. Like, you'll hear me and Lori talk about it, like, oh, we're in chop right now. I'm not taking anything right here. We didn't have a setup yet. We're saying it. It's like, okay, if I got a short on there's a potential Xbox. Your first thought should not be place my order. Your first thought should be, can it make it 10 ticks? Remember, because that comes before the entry. Those 7 steps are a lot more important than people give them credit for. Like, Xbox, take it. Finally got one. Oh, thank God there's finally a trade. Especially when they're slow. And that's why I was saying right now, the discipline and patience can really pay off for you. Because when things start going faster, you're going to need to be able to see these things. Now, if we drop down to lows again, single lines won't be as much of an obstruction. But these kind of levels that we're looking at now apply at any time. No, 10 tick including the 2 for offset, not plus 2. So again, dev, paw, institutional block, that's a wall. That's one where me and Lori are like, man, it'd be really, you probably heard me say that before, it'd be really nice to get an Xbox here. Y'all ever hear me say that? Like, really nice to get one of these trades right here. It's like, as I'm looking at the chart, and I'm like, that would be awesome. Because like I'm like, man, I'd like to go short here. Now I'm still going to wait for a signal. So really, any level at highs, you want to be like very careful of going into. Let's see, I got a question over here. Let me see if I can even find it. Notice in my levels, I didn't put pause. Somebody asked about a trade today at 115. This took a trade right here. A paw mini magnet off of an existing paw is probably one of your strongest entries you can take, Jim. So Jim asked me to look at this and go, hey, would this paw keep me out of the trade? It's like, well, one, no, because I'm above the paw on my entry. But two, and again, an Xbox with a paw on a paw is probably one of the best trades you can take, period. Often will go 20 ticks. An Xbox with a paw on any level will often go about 20 ticks. Is that something worth writing down? An Xbox with a paw off a level will often go 20 ticks. Did y'all know that? Everybody knew it? There we go. We got some people who knew it. All right. Let's see here. So, but yeah, I mean, you definitely got room for this trade. And again, Xbox with the paw off a level. So if you keep an eye out for those, you can have a lot more confidence on those trades. Somebody posted a link inside the chat. Like it's not clickable inside the chat. See, a question. If the entry for a long was just above settlement and room to profit, would you take that long or no because the trade was near settlement? If you don't know, my answer is going to be avoid trading around settlement. That's really the best advice I can give you. I don't care that there's a paw above the entry. An Xbox with a paw off of a level, or especially a same paw, is ready to take off. Yeah, it has a trapped order right there. Xbox trapped order with the paw. So there's no dependence on the read there. If it's an X box trapped order with a paw on a level, the dynamic is they just do. So, and that's this entry right here. Right here. The little red boxes are called leading orders or leading volume. You can actually turn those on in the institutional order prints. An edge to doing that is if you know how like you'll see, this is actually a good tip for you. You know how you'll see like the trapped order go away, come back, go away, come back. Anybody ever see that happen? If you'll turn on, I'll show you how to do it. If you go to your indicators, go to your institutional order prints, and then go up to leading volume, set it to true. I make mine crimson just so it stands out that it's different, and I know what it is. But setting 14 there. Do y'all see that setting? Set that to true. If you set that to true, then what will happen is when it drops down, when you usually see trap going away, you'll see the leading order there, and you'll know that it'll be back if it comes back up. If you don't see either the red or the blue there, then it's actually went away. So you can put your order on as long as you see that red or blue, because this color will change. Like if the bar comes below the open right here, it'll turn red, and you know it's still there. So you don't have to be like canceling, putting on, you know, over and over again. All the indicators on my chart are included with silver. Everything on this chart is included with silver. Can I walk through that slower? Okay, right click, go to indicators, click on institutional order prints and find setting 14. They're in alphabetical order, but leading volume, set it to true, change the color to crimson. Okay? When you see often the trapped order go away because the market comes below the open, you'll see it go away, and you'll see it come back when it goes back above the open. If you'll turn on leading volume, then that'll turn red, and you'll know that if it comes back up, you'll still see trapped orders. And that's all I use it for. Okay, I don't make more out of the leading orders than that, what I just said. What about this? Well, what about if it's this? Does it mean this? Just use it just to help you see that the trap is still going to be there if it comes back up. Okay? If the red stays and it comes back up, you'll see the trap still. If the red goes away, and you'll know. And you'll see the red where the blue is. It'll become red. Okay? A paw on a level, only a paw on a paw can be a paw of another level. A paw can be on any level. If there's a trapped order with a paw on any level, it's good. If it's a paw on the exact same level as another paw, that's even better. I mean, just that one lesson from tonight is gold for you. And then now you know how to see your traps when the bar is just oscillating, without it disappearing on you. It'll just go from blue to red while it's going up and down. And I'm not talking about the red up here. I'm talking about this blue will change to red right here, okay? Everybody understand me? Provided it's on a reversal bar, as always, for a setup 2. So one recommendation has been made. Should newbies just focus on X boxes with pause? You can. They're easier. You're going to get a lot less trades. But they will, I mean, they're often a lot better. And if they're off a level, they're even better. Explain why the order with the minus 189 is not good. Well, I'd give you 2 reasons. One, it's not a reversal bar. So therefore, it's not a valid setup. Second was, I mean, it's going right into a magnet. Remember, your trapped X boxes have to be a reversal bar, meaning the bar has to go in the opposite direction as the bar before it. Make sense, Willie? Awesome. So y'all picking up a few little tips tonight? Because my goal tonight was sort of just to go through charts, go through the obstructions. By the way, everybody thank Christopher Wall when you see him in the room, because he helped me get all these charts together. This list together. He's like, I need to make a list of this. I'm like, that's a great idea. Will you make a list and then grab charts for me so that way I can do a webinar on that? So, and like that's really how the conversation went. He's like, what are obstruction levels I need to be watching for? So I listed them out. We went through them a couple times. I mean, that's traders helping traders, right? All of us working together. So y'all starting to see some of these obstructions. It's not as elusive, hopefully. Are you starting to get a little clearer? Awesome. And it takes a little time to get it, you know, but the more you start looking for obstructions, then when you see setups, you'll see if they're in your way. And I mean, and this was good for Wall to put this together. Do you think it helped him actually going through and having to find these examples? Do you think it helped make him a better trader? I mean, Wall's on the webinar. Did it help you, Wall, to have to go through and find this stuff? He's like, oh, yes. So, I mean, he put some time in to find the stuff, to find all the examples of the obstructions. He's like, everybody should do this. Everybody should go through and find examples of all the obstructions on their charts. Like from the first thing, and just go find your own examples of every one of them. Be able to identify every one of them. And that'd be a great homework assignment for y'all to do this coming week. Is get that list of obstructions and go find examples of every obstruction. Just for the purpose of identifying obstructions. I'm telling you, those of you who do the little homework assignments I give, those of you who actually spend the time to watch the videos, I mean, it was hilarious. I was talking to one of our customers, and he's in his 70s, and he's like, I don't know what some of these people's problem is. If they just watch the videos, he's like, everything I need to know is in the videos. He's like, I went 5 for 5 today. You know, like, I mean, if you just take the time and watch the videos and slow down, because what happens is there's little tidbits in those videos. And so, you know, some of them you got to watch a few times. But it can definitely be valuable. Does a low volume score help to strengthen it? I like seeing a low volume score before a reversal bar, but it doesn't make me take the trade itself. If you get a low volume score and a star before a reversal bar that has, like, say, a trapped X box, even better. It's just little things adding up. Doesn't mean you have to have it. Awesome. So y'all got these examples down, and y'all can go through and you can obviously even pause this when you go back, and if you're watching it on replay on a webinar, you can pause this and you can look at it. The low volume score is a number between positive 13 and negative 13. And it's the number that's printed above every bar. So that's setup 4 and 5. We go into that in a lot more detail. But a lot of y'all are still and should still be on setup 2. But it just means a number between positive 13 and negative 13. And then there's high volume score, which is when you see a really big number. Often the market will come back to that price level. Like, let's see here. Let me pull over in Q. Look at this. See all these numbers? 14, 29, 1,049. You see that? Do y'all see the 1,049? Watch what happens. Right back down to it. It's just sort of cool. When you start seeing stuff like that, remember when I said like me and Lori see things that y'all may not see yet? Well, that would be an example. Okay? It's not a trade in and of itself. But it's like, you know what? I expect that it's going to pull back down to that. And if I get a setup telling me to do it, well, then I'm really excited. All right, so be aware of your surroundings as a sniper. Make sure you have a clear path to 10 ticks. Be patient. There will be more trades. Some days you'll have a lot of setups. Some days you'll have a few. I called 3 trades in the room this morning. We went 2 for 2 because one of them was break even. We got out of break even. Okay? Take the best of the best. Stack the odds in your favor. Look at the macro and the micro. Okay? This helps separate the 10% from the 90-90-90. And I mean, that could even go into sniper on the 90-90-90. The training's there, but do you take it? The bonus webinar content is there. Are you watching it? The replay is there. Are you taking advantage of it? The mental mind games is there. Are you going in and mastering it? The mentor rooms are there. Are you asking questions and posting charts? The forum is there. Are you asking questions? The Facebook is there. Are you asking questions? People taking advantage of all of the pieces are the ones who are making it to the 10%. The rest won't be here in 90 days. They'll be looking for the next gold indicator. The next little thing. I'm teaching this free and I'm going to do you a favor. And by some person who probably has never even posted that they have proof of ongoing profits. Have any of y'all seen that on Facebook before? People offering all this free stuff. But they've never even shown that they've actually made money. You might even see somebody trying to copy our stuff. Anybody seen that? I've seen it before. I've seen it just in the last week. Trying to copy. And they're like, oh, we're going to open up the doors for everybody. And, well, why don't you open up your P&L and show me some actual profits on a consistent basis? Right? It's like, you can try to mimic it, but there's a lot more behind this than it looks like, right? So, be aware. master the rules of the setup, but also master looking at the market as a whole. Okay? See the whole picture. Now, what about multiple markets? Here's a question for you. When is one market enough? When it's moving. Yeah. When there's higher volatility, a lot of volume. Do you think you should be looking at multiple markets when there's a lot of volume and the market's moving everywhere? Do you think you can actually efficiently handle when things are going fast? Can you handle multiple markets? Not for a second, not a chance. Even Lori and me will focus on just one chart when things are moving. Lori focuses on one chart, I think, no matter what. But even me, with all my monitors, things start flying, I zoom into one. Even though I've mastered it, I zoom in. Now, I may have a couple up on the side because I've done it for a long time, but when it's moving, you don't need more than one. Okay? Yeah, and sometimes you're just better at one market. She feels comfortable there. She knows it. She does it day in and day out. Do you think that's helped her master it? Yeah. When do you think you might need more than one market? I love that we're getting the right answer. When things are going really slow. Like, it's been slow during the day after like 10:30. It's been slow at night. Okay? Do you want to do correlated markets? Do you want to do like YM and NQ at the same time when it's slow? Or do you think you're just going to get two slow markets? Like oil would be another market. 6B, which is the pound dollar, would be another market. Gold, GC, would be another market. Okay? So you can branch out. Now, if you're new, you probably just want to stick to one. But if you've been doing this for 30 days especially, you can branch out, check out 6B, check out 6E, check out GC, check out CL. Okay? When things are going slow. So the market conditions will tell you that. When there's news and Trump and election and China and da-da-da-da-da-da-da-da. One market. So again, mix it up. Indices, foreign exchange, commodities. I think Marion actually made a post in the forum already in the sniper section on this, but let me give you a little list. Like I said, CL is oil. Okay. GC is gold. You got 6E, 6B. 6E is euro dollar. 6B is pound dollar. Would not do bonds. Unless you're very experienced. And I mean, that gives you commodities, foreign exchange, and indices. Okay? Tick sizes. On gold and FX pairs, I use tick sizes of 6. By the way, you can trade all of these in the exact same account. Okay? So on gold and FX pairs, I use tick sizes of 6. Everybody write that down? On oil, I use the tick size of 8. Okay? You can trade all of them in the same account. Now, you do have to have multiple data feeds. So if you got the really cheap $3 data feed, you may need to expand out. Let me check something. 1 second. Let's see. Okay. Can I show one of the other charts? Sure. Let's see here. Here's gold. It's just another chart, just another symbol. Okay. Let's see. Oil had a lot of institutional blocks today. Some big orders going off. Let me find 6B. Here's 6B. Coming down, bounces right out the dev, goes up. There you go. Got plenty of room. So do they move the same? No. They have different factors that influence them. Yeah, institutional blocks, just be aware they can return to that level and be aware that they're an obstruction. Now, we usually trade NASDAQ, right? And what tick size do we use? 10. What profit target do we go for? Basically 10, okay? From the lower high of the bar. What's our worst case stop loss that we put on? 20. Okay, so we use a 10 tick with a 10 tick take profit and a 20 tick stop. As far as the simplicity of the ATM, we have to measure from the high-low bar, all that, right? So if you were going to do a 6 tick, what should your ATM be? What should your take profit be on a 6 tick chart like gold or 6B or 6E? 6. What should your stop be? 12. If you're trading oil and it's an 8 tick size chart, what should your take profit be? 8. What should your stop be? 16. Could you make ATMs for each one and call them the same? Like, we got the 2010, you could make a 16.8, you could make a 6.12. And then on that chart, you could select that ATM, right? So, pretty simple. It just takes a couple minutes. Now, do you think you should do your, there's a good question that came up. Should I do my 60 and 240? Do you think you should do your 60 and 240 flux charts on all of them? I use a 6 tick bar, so therefore I use a 6 tick take profit on gold. Yep. Same thing on FX. Now, one thing I want you to understand is there's pound dollar spot, like what you trade at an FX broker, and there's pound dollar futures, which is what you trade on the futures exchange. 6B is a future. So the big difference is there's interest rates in currencies, right? Like dollar has interest, pound has interest, okay? Well, in the spot market, every day or even every hour, depending upon the broker, you either make or lose some interest on the position you hold. Okay? So like if pound pays higher and and you own the pound and you're short the dollar, let's say the pound had a 3% interest and the dollar had a 1% interest, then there's a 2% interest over the year that gets divided down to how long you held the position, and you get paid that interest. Or if you're short it, you end up paying that interest. Okay? Another way to put it is if you have cows and you're selling cows and you're going to sell cows in 3 months in the future, like if I have cows right now and somebody says, hey, I want to buy your cows, but I want to buy them in 3 months, I want to buy them for this price. Are you going to charge them that price plus, but they don't want to pick them up for 3 months? Are you going to charge them for all the feed also? I'm just trying to make it real. It's like, okay, I'll pay you, $500 a cow, whatever. But I want to pick them up in 3 months. Okay, well, that's fine. I'll go $500. 3 months of feed is going to be, $50. So you got to pay me $550. So they're saying, I'll buy it for this price in the future. That future price has to include the cost of holding on to it. Okay? So I'm just trying to make it real simple. Don't make this complex. If you have cows and somebody wants to buy your cows, but they don't want to pick them up for 3 months, are you going to charge them for the food to hold on to them for 3 months? Or are you just going to eat that cost? And it sounds funny, but this is actually how futures work, because you can actually buy and sell cows on the exchange. So they got to cover the cost of the food. So the futures, if I'm going to buy March live cattle at whatever cattle, like if I went to the auction today to buy cattle and there's a certain price that cattle is worth today, well, if I was going to buy that on the futures exchange for delivery in 3.5 months, I'd have to not only pay today's price, but I have to pay 3.5 months of whatever it takes to take care of that animal. So the future price includes the cost of now and whatever it costs to store the grain, or what the interest cost, or what the feed cost, whatever. So on a future FX, you're paying, the reason the spot pound dollar is a different price than the future pound dollar 6B is because the interest rate from now till the delivery of that future in March of 2020, the interest rate is built in. So, what's the difference? The difference is it's a future contract. So the future expense of that holding that contract is built in. Does that make sense to y'all? I know like that's sort of diving a little deeper into what futures really are. I mean, I know people have actually taken delivery on their future contracts on cattle. It is FX. It's FX futures. It's just not spot FX. Spot means the price right now. Future means the price in the future. So do you do flux levels on every market you trade? Yes, you do. You should pull up 60 and 240 on every market you trade. Now, you don't have to open like 2 new charts for every market. Just change the market. So let me show you that. Because, I mean, you only open it like once a day. Which I only open it once a day. Let's see. Let me find one of them. So if I'm looking up 6B, I'm just going to click over to 6B. Make sense? Implied volatility does not impact the future price, but expected interest changes may. Then I'll just draw my levels. Okay? So all markets are different. They have different things that affect them, but it doesn't really matter what the symbol is in the top of the chart, right? A reversal bar with a trapped order and an X box is a potential opportunity. It's the same thing. A sniper has a good, clean shot, and they don't care what the day of the week is, what the listed calendar month is. They don't care what the symbol is. A setup is a setup. An X box and a trapped order is a setup. Is it clean? Does it have room? Period. I'm going over the 10-minute bar chart on the 5th on Monday. Now, Stephanie brings up a great point about news. Do you think it might be helpful to, if you see a bunch of news coming out on the yen that night, you could look at 6J? Or on the Aussie, you could look at 6A. Or on the New Zealand dollar, you could look at 6N. Because that's probably going to make the market move. You're looking for movement, right? You don't have to change the bar range. The bar range will take care of itself. Eric? Now, there are also micros. There's micro gold, MGC. There is, what is the micro CL? It's been forever. There's a micro CL, which is worth $5 a tick instead of $10 a tick. It's micro gold, which is worth $1 a tick. There's M6B and M6E. M6E for Eurodollar is worth $1.25 a tick. And John's looking up QM is mini oil, by the way, $5 a tick. It ticks a little different though. It's weird. And then M6B is like 6.62 or 0.625 cents a tick. Yeah, so QM is mini oil. Yep. Now, here's what I'm going to tell you. With mini oil, mini euro, mini gold, mini pound, those are not as liquid as micro NASDAQ. So take your trades looking at the main chart. If you're trading micro gold, look at GC. If you're going to trade QM, look at CL. Okay? If you're going to trade micro 6E, then look at 6E. You can have a little separate 5-minute chart up, or you can have a DOM up, or whatever to take your trades. On NQ and NQ alone, you can take trades from MNQ. If you have like an X box, you can put like an X box on MNQ. You could take that trade on NQ. If you had a trapped X box on NQ, you could take that trade on MNQ. Yeah, there's MGC and there's QM, which is like $3.33 a tick. It's sort of weird. It's QM is mini oil. Yeah. But there's other small like $1 tick markets you can trade. And remember, the liquidity is lower, so you have to chart the full size chart. You also can trade pigs, cattle, sugar. There's all sorts of things out there you can trade. Soybeans. But I'm just trying to open your eyes a little bit that there's more out there than NQ. But I hope y'all hear me when I say when things pick up, go back to one chart. And if trying to watch multiple charts is messing you up, don't do it, okay? Now, you're going to have to leave your charts open if you want to trade them to get your order prints to print, right? So I am not trying to get y'all all distracted and looking at every other market. But I know there is a challenge in the market condition right now, which can become an opportunity, which I would challenge you to sim trade. Okay? But which can come an opportunity for you to learn to look at other markets. Okay? Are y'all hearing me? Because if I hear like people going, I can't handle all these charts and I'm missing all these good trades. And 3 a.m. to 6:30, I like FDAX. There's also micro FDAX. For smaller accounts, I love FDAX. You have to get a added on subscription for that one, by the way. You have to get the Eurex. But that's one of my favorite markets. And then, of course, 6B for pounds, 6E, and even NASDAQ can be great in the Euro session. But yeah, 6B, 6E, FDAX, and then FTSE 100 is another. It's sort of like the YM version. And then FDAX is sort of like our NASDAQ. But FTSE and FDAX you need another subscription for. You got to add Eurex onto your subscription with your broker. All right, so did y'all pick up some stuff on multiple markets that you can use? Are you going to go trade live on this right away, or are you going to sim these other markets? There you go, sim, okay. And you can go back and run market replay on these markets and see how you like them too, okay? Make sure you have the right contract months in. If I have one more person ask me why 917 isn't loading on their chart. So remember, also you know how to roll over. There's a little video on how to roll over. If you don't know, go watch the video. It's the first section, step 7, step 1, video 2. All right. You can master the setup and the rules. You can master the levels and the obstructions. You can master handling multiple markets. I want to remind you, you need to master yourself. Okay? We have a discount right now, which we have set to expire tomorrow. A lot of y'all have already watched the webinars that we've done on mind mastery. So it's $237. All it takes is 1 or 2 bad trades, or missing out on, a couple good trades. Have any of y'all missed out on at least 2 good trades due to psychology? Have any of y'all taken bad trades due to psychology just because you wanted to trade? At least 2. So say you missed out on at least 4 trades. Even this week. Okay, well this costs $237. So if you've missed out on 4 good trades, just taking the small scalps, or if you've taken 2 bad trades, this would help cover that cost. And this is literally the holy golden, holy grail of trading is your mind. It's not some other indicator. Because I don't care how good your system is. If your mind's messed up, you're going to jack it up. Okay? So hop on over. If you haven't got it, and the question was, is it included with Platinum? Yes, sir. It is included in Platinum. It's part of the all-in. But go on over to apexinvesting.com/mind mastery It's only 237 bucks. And this is me training live, 7 sessions of me training live on how to overcome the mental challenges in trading and how to increase that mental capital. And here's one of the trainings that I did on it. Okay? Check it out right there. But definitely worth every penny. And I've made it as, really cheap to try to give nobody a reason to not be able to get it. Okay? Like, that is one of the best things you could be doing over the next week. So you know where to sign up, right? apexinvesting.com/mind mastery. So we talked about, should you be trading live during Christmas week when all the big boys who lay the order prints down for us are gone? And I know some of y'all feel like, I gotta trade. You know, the best traders I know, literally most of them take off the week of November and don't come back until the middle of January. They take off on Thanksgiving and they come back in the middle of January. Now, I'm not telling you can't trade at all, because those traders are trading usually for much larger positions, much larger moves. But don't run your Christmas by trading in crappy liquidity. Like, make your year by taking advantage of replay, mastering setup 2, and all that, okay? Market replay. If you go through and you do the batch download under the webinar section, you need to add the 1219 contract back on your chart. I talked about this last week. And remember, all you got to do is go to your control center. Okay? And let's see here. Go under Tools, Instrument Manager, and if you want to add on the 12 contract, okay, let's say you just have the 320 contract, but you want to do replay. You don't want to do replay on a contract that's only been open for a couple weeks. Okay? So you just type in NQ, hit search, click it, choose the 1219 contract. You can have both of them on there at the same time. And then hit OK. And then you can choose that. Okay? You can choose that when you load your market replay chart up. Yeah, sometimes during the summer, it depends on what's going on. It can be a good time to take off. Usually, like right before Labor Day is when things get really slow, to a couple weeks after. Usually, a week before Christmas to a week after Christmas, things are pretty slow. So test backup markets for, slow times. Rewatch videos, especially mastering setup 2, step 8. Rewatch the webinars. You have tons of webinars. Dive into your mentor groups. This is a good time to be asking questions in your mentor groups. As you're doing replay, you can capture screenshots of replay and ask questions. Now, we have a live event coming up in March. Did y'all know that? And this live event is going to be hanging out with me and Lori, just going through charts. Big round table event. Okay? And the whole focus is how to get to your 6 figures in 12 months. Y'all like that idea? Like side by side, going over, like having our laptops open, going through everything. So it's going to be in Fort Worth. Technically, it'll be in a place. We're locking in the contract Monday. I just came from the hotel. It'll be Flower Mound. So again, this is a live event, and we'll be doing training, but we'll also be doing a lot of sit down and talk and chat and going through everything. And we figured out how to get the cost as low as possible, several $100s lower than last year. So you're going to want to be there. There will be limited spots because there's only so much room in the conference room. Okay. And we actually have negotiated a really low rate at the hotel. I just have to get the contract finalized and in. So I'm supposed to get that Monday. On the December 30th webinar, so a week from Monday, I'm going to announce all the details and give you the link. And it'll be a 3-day event. Be a Thursday. We'll start Thursday morning, be Friday, Saturday. We'll wrap up around 4 or 5 o'clock on Saturday. And it's going to be like the third week in March. But basically, we figured out what's the cheapest. We found the best rate we could possibly negotiate for you, like $50 lower than last year per night at the hotel. We got food included, breakfast and lunch. We got a great venue with tons of areas to hang out. Anyways, a lot of good news coming. So, anyways, make sure you're on that webinar, because that's the first people that are going to hear about it. Okay? So, the next webinar again is on December 30th. I'm going to talk about dynamic magnets. And, of course, I'm going to be talking about the live event. Make sure you go ahead and register right now for the December 30th webinar. There are 38 people registered right now for that December 30th webinar, which is pretty normal. So they usually come in late. But go to the apex.net sniper page and click on section 2. I'll show you in case you don't know. And then just click here to register. And I'll also drop that link in the chat right there for you. The dates for the event are going to be the 19th, 20th, and 21st. You're going to want to fly in the evening of the 18th, or whatever time you want to on the 18th. But the dates are going to be the 19th, 20th, and 21st. Fly out either the evening of the 21st or on the 22nd, your choice. Fly in on the 18th, just in case y'all want to book tickets now, airline tickets. But yeah, you want to fly in on the night of the 18th or the day of the 18th and fly out on either late on the 21st or the day after. And that's to DFW Airport is where you're going to fly into. The symbol code is DFW. But I'll give full details, all that, but we got a great rate. You're not going to find a better rate anywhere near what we got for you. So make sure you go ahead and register for the webinar. Make sure to tell people about Apex. Hop on our Facebook group, post content, ask questions. Like our Facebook page, share posts. Remember, we gave away a free month to Dottie last week, and we'll be giving away another free month in January. So make sure you are, every time you like a post, every time you comment a post, share a post, or post in the forum, you're getting another entry to win a free month. Follow us on twitter.apexinvesting.com. Please post your experiences in the forum, okay? And then refer others to keep cost low. Let's see. Well, it starts on Thursday, and then it'll also be on Friday, and then it'll also be on Saturday. I'm going to make sure nobody gave me the wrong dates. Yep. So flying on the 18th, it's on the 19th, 20th, 21st. The 19th is a Thursday. Should be there by 8 a.m. So it'll start at like 8 or 9 a.m., but probably 8 a.m. Contest. Again, like the Facebook page, join the group. Any questions y'all have? I know we went a little over on our time, but I think I got everybody's questions. Did I miss anybody's questions? I got them all. Sweet. Okay. What's next? Make the most of the holiday. Sign up for the next webinar. Sign up for Mind Mastery. Be in the Elite Room tomorrow. And I will see y'all there. Okay? The 3 to 6:30, I said the pound 6B, the euro 6E, FDAX, FTSE, and NASDAQ. 6 p.m. to 9 p.m. NASDAQ, yen, New Zealand, like 6N, 6Y, or 6J, I mean, for yen, and 6B. Do I have a course on fundamentals of different markets? Not really. No. Just watch the news. Hey, Stephanie, message me directly with that, okay? And Skype. All right. Y'all have a good evening. I'll see you tomorrow morning in the room, okay? Awesome. Y'all have a good night.